Good morning. Wow, that ended right at 9. Wow. All right. Good morning. One more mouthful of food. Got to get some more protein. All right, good morning. Let's get going. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne. Cheers to you. Enjoy your coffee. So, let me know what you want to do today. Dollar pairs, yen pairs, gold, oil, Bitcoin. Yeah, it's all good. You want to cover the stock market? Oh, for sure. Hey, Wayne, what about nat gas? Okay, we can do that. So, please let me know how it can help. I am a humble servant in our relationship. Let me know how I can serve you. The tools that we're going to use today, I use the Traders Way trading platform. They're an ECN, and that's the type of broker that you want. Trust me, you want an ECN. Yes, there are not many. There are a few out there. The one I recommend is Trader's Way. So start your due diligence there. Check them out. See if it can earn your loyalty and respect. The training techniques that I will use today are taught at investorbootcamp.com. Don't worry, it's $88 a year. We also have a couple of live groups that you can join if you want to up your level of training. We are likely to use QuantBox. In fact, I already have a question here. Wayne, can you cover, what was it, Aussie, what was it? Aussie Kiwi. Yeah, I already covered that hours ago. And I uploaded the YouTube video to YouTube for the first time in a couple of weeks. And that's where I cover the macro and all that kind of stuff. And then we may also use TRADARS today. Yeah. And that's me. Cool. And yeah. Cool. Yeah. Funny thing is, that's the building that FXCM is in. Oh, the memories. The memories. Yeah, it was pretty funny. Anyways, cool. So, so those are the resources that we are going to lean on today. Guten Morgen. All right, so why don't we start with the stock market, huh? Sound good? Everybody happy? Great. Let's start with the stock market. Yesterday, we identified this as our role reversal zone. Not bad. Not bad. So the S&P 500 drifted down into our role reversal and is now heading up, attacking what is resistance. Very, very basic price action, and it's working real nice. Okay, cool. So will it make a higher high? Oh, I don't know. If you use daily pivot points, you will have a target. What we're using here is just blind technical analysis. One trading technique. There are many. Okay, there are many. Now, when we look at the Dow, it gives a different picture, and this is why I do like using pivot points, because, delete. Okay, because this is an important price, and oh my goodness, did that have an impact? That is a counter trend setup. I only teach one counter trends trade. Okay, that relies on both time and price. There are two components to the counter trend trade. But when you get that has everything you need for a counter trend trade. And the target is, right? The rough target, it's a rough target. The rough target is this price right here. And mission accomplished, as George Bush Jr. would say, right? Cool. Okay, so much different story there. And then we can look at NASI. When you're on the hourly chart, you can see a kickoff of the 55. I think more importantly than that, that might be a coincidence, but I think what's more important is the role reversal. Flip over to the 4H, okay, and that makes sense, right? Yeah. So once again, pretty basic trading setups. Okay, cool. leaning on price action. Remember, I've always said, if you don't understand price action, you'll never be successful as a trader. That's a pretty big statement. Shows you the importance, the emphasis. Okay. Okay, Bitcoin going up to the next level here, which is quite interesting. I want to see what's going on here, which is the daily, and we are still playing off this price. So I'm thinking somewhere between this price and this price is the next window around on the daily. Which means today we might have a down day in Bitcoin. So you look on the hourly and you're not sure the importance of this move. And I would say, well, based on a daily chart, there is a pretty big possibility that we get a rollover and lower low. LE says, hey, Wayne, does a strong dollar mean higher crude oil prices? What are you, okay, so what currency are you talking about when you are talking about the price of crude oil? Oil priced in gold, oil priced in euro, oil priced in yuan, oil priced in US dollar, oil priced in Canadian dollar. Okay, well then think about the logic. If a barrel of oil is always a barrel of oil, but the dollar gets strong, then a dollar buys more oil. You need less dollars to buy the same amount of oil. So what does that do to price? If $1 buys more oil, what happens to the price? Okay, well then let's describe it this way. Let's make this a unit of oil. We'll call it a cup. Okay, 1 cup of oil. Yesterday it cost $1. Okay, but then the dollar got strong. 10% stronger. So now it costs $0.9. Same cup of oil. Then the next day, dollar gets a little bit stronger. Now the same cup of oil costs 0.85. Same cup of oil. So what's happening? Okay. The cup has stayed the same. The oil has stayed the same. The only thing that's changed is the dollar got stronger. Do you see now, Ali, the relationship between the dollar and oil? There you go. Yeah. So you could argue they're inversely correlated. All right, so going back to Bitcoin. Okay. Okay, there's still a fair potential here, right? No, LE, CPI is a measure of inflation. It doesn't imply demand. What would imply demand? Anybody want to guess? What would imply? Like you could assume an increase in demand. You know, it's not necessarily true, but you could assume. What would imply an increase in demand for oil? What economic indicator would you use? Yeah, but no, you're skipping all over the place, Al. Okay, you're grabbing at straws. It's a very basic basic question, everybody. What is your answer? What economic report could you use to imply demand for energy? No, those are not economic reports. Well, they will tell you what they think in future demand is. Yeah, but I asked you a very specific economic report. No. Again, that's just inventory would be an OPEC or EIA or IEA. Those are not economic reports. IMF is an institution. So anyways, good question, LE, because a lot of people don't get it. Okay, good. There you go. Yes, GDP. Growth. That's it. Growth. Growth in the United States, growth in Europe, growth globally, growth in China. GDP. Is the economy expanding or is it contracting? Are they turning on the lights at the factory or turning off the lights at the factory? That's it. Okay. So when you guys are saying CPI or PPI, those are inflationary numbers. It has nothing to do with growth. That's price. Tell you what, I'll print $45 quadrillion and I'll move CPI, but it doesn't have anything to do with oil. Okay? No. PPI and CPI could measure price changes because of shortages. PPI, CPI could measure changes in price due to monetary policy. Has nothing to do with demand. Okay? Retail sales is a measure of and heavily influenced by the price of energy and how much you have to pay to buy gasoline at the pump. But it doesn't measure demand for energy. It measures how much you paid for the energy. And there's this issue in economics called elasticity. And it's a way to describe that you bitch and complain about paying too much for gasoline as you fill your tank because you have to go to your stupid job and work for your stupid boss and all your idiot colleagues so that you can pay your mortgage. You don't like the people you work for. You don't like the company you work for. You don't like how much it costs you to drive to work. And your car insurance is crazy high. Gasoline prices are crazy high. But you need to buy groceries and you need to live in your house. You have to pay your mortgage. So you bitch and complain all about all that stuff, but you're going to do it anyways. That's called elasticity. Because there's not likely a solution. You're not going to ride a bicycle, right? Because there's no substitution. Now, if the price of Coca-Cola goes to $2 a bottle, but Pepsi stays at $1.50 a bottle, many consumers would switch to Pepsi. If the price of beef goes to $20 a pound, you start buying chicken. Okay? Substitution. Okay. But none of this really measures demand, right? Oh, right on the hike. Congratulations. Again. Yeah, that's great. So anyways, yeah. So there we go. So good question. Good question. And so we had an opportunity to have a good discussion. All right. So now this is what I'm thinking for Bitcoin. Okay. Reasonable probability about that. And that comes from even this chart. Okay. My WTI has come down to the next level of support. Remember, I was bullish on this until Friday of last week. Okay, and this is my out price, and then I told you I'm not getting back in. Oh, yeah. Coolio, huh? All right, so at least we identified this, okay, as good support. But when do I get back in? When do I become a bull again? I don't know. Maybe in the next day or two, or maybe November. That's why I'm walking away. Now, how do I know when to hold them? So I held this for weeks. Okay. I bought, I think, in here somewhere. I think even down here somewhere. Okay. And I think I bought it, get more here. And I think I bought more here. So why did I walk away here? How do I know when to hold them? How do I know when to fold them? And how do I know to walk away? What's the answer to that? I have QuantBox. Okay? I have QuantBox. Technical analysis. Now, I love technical analysis, but I already knew. Technical analysis already confirmed that somewhere in here is a top. Yeah. I already knew that months ago. We talked about it in January, for crying out loud. We knew to buy it in March. Okay. Is anybody here? Can anybody here, like, was anybody in the presentation I did in January? And I said in that presentation that this March is the buy and Canada Day is the out. Can anybody confirm that I could say the end of March and the beginning of July is the trade? Anybody confirm that? Frank says aye. Anybody else? Eskimo, aye. Jordan says, what? Roderick says facts. Yeah, I think I charged $4.44 to give you that information. Probably worth it, huh? Stingray says yes. Musa says yes. Denise, indeed. Cool. So then when we go back, okay? And by the way, can you see the power of this? Like, it's $79 a month. And if you don't know these things, you're just blind. Like, I mean, like, you should, if you're not a subscriber, and I'm not selling my book kind of thing, meaning, you know, I'm saying all this to sell my service. You can think that, but that means you don't know me very well. But let's go back to the facts. Like, if you don't know stuff like this, then you're not going to be able to compete. That's it. Because this is a competition, right? Oh, you want to go to the Olympics, but you don't like training. You don't like working out. You don't like getting up early to practice. You don't like staying late to practice. You don't like paying for coaches and equipment. You just want your God-given ability. The gold medal is going to come down from heaven and be presented at your feet. Good luck with that, bro. Good luck with that. I always think of like LeBron James in the playoffs, where I was hearing a story about, you know, he goes through this pregame routine and workout so that he can then get onto the court, play the full game at full energy, full speed. And then there's a post-game routine, like by 5 minutes after walking off the floor, maybe even less, 3 minutes before walking off the floor at the end of the playoff game. They got IVs on him. They're forcing food down his throat, and then they get him to the airplane. And while the airplane is flying, he gets, you know, frozen. Literally, they put him in this machine and it freezes him. And then they take him out, and then he's got like 2 masseuses that are massaging, getting the blood moving through that body, and he's got IVs on him again, and they're pumping proteins and electrolytes and everything into his body, and he doesn't even get to bed till like 2:00 in the morning. And the next, like 2 days later, he's got to do a game again. And I'm thinking, wait. He's got dietitians. He's got people doing his workout routines. He's got guys like masseuses, medical doctors. He's taking ice baths and freezing himself and like anything to outcompete your competitors. And I like that attitude. Right? And so anyway, so like, you don't know this, why not? Oh, I don't want to pay the $79. Well, you're not going to compete. Musa, I want to be a boxer, but I don't like getting hit in the face. Well, good luck with that. Right? Yeah. I mean, that's the thing. Not only, and maybe that's a boxing is a great analogy here. There's two components to being a trader. One, punching. Two, being punched. So yeah, you do need to compete, and you need to know when to be offensive, and you need to know when to be defensive. And so I was heavily aggressive for many, many, many weeks on oil, and now out. Okay, yeah. So anyways, are you truly being competitive? That's how I want you to think about things. Yeah. Cool. Anyways, there's the gold. I got very, 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 very unfortunate yesterday. Do you guys remember? I owned it, I think, on this pullback, right? And it collapsed on me and took off, you know, cliche, right? Yeah. Well, I suppose if I had taken more risk, I would have caught this reward. And well, I suppose that's a hard part of trading, right? Because I did move my stop to reduce risk, and now because of that, I lost my reward. I could have maintained the higher level of risk and then got the reward, but you know what? Yeah, so I got knocked out of break even, right? I got knocked out on this. Really unfortunate. But what I'm trying to say is if you perceive risk and you address the risk that you perceive, and this occurs, it's not wrong. If you perceive the risk and you did nothing, that is what is wrong. And you're like, well, I did nothing, but it worked out. Okay, well, that's called luck, which tells me if risk increases and you're used to doing nothing and in fact getting rewarded for doing nothing, then sometime in your life you are going to get bruised. Because you don't have the guts to address reality. You'd rather stick your head in the ground like an ostrich. You see? Because in this case, I managed the risk and it came rip-roaring back. If I had done nothing, sure, this time I made money. But one day, this market is going to tank. I don't care about gold or dollar, but you're going to put yourself in a situation where something is collapsing and you've been trained to do nothing. And you've been rewarded to do nothing. And this thing collapses and you stood around doing nothing. Remember, if you're a professional trader, your job is to always do something. So if you're being rewarded to do nothing, okay, it's going to lead to catastrophic failure one day. So anyway, so yeah, I moved my stop. I removed the risk. Oh, I didn't collect the reward this time. Reward is not my number one goal. Does anyone know what my number one goal is? It's in my book. It's in the beginning of my book. Okay? I use a military analogy. I don't want to do something stupid and get myself killed. That's what the guy in the foxhole is thinking about. Okay? The second thing, achieve the mission, right? Accomplish the mission. Get out of the foxhole, push forward, keep going. Okay? And third, win the war. Okay? So my number one goal will always to preserve my capital. Always. So if I see risk, if I perceive it, my job is to do something about it. Okay? So I was in a situation like this and we drop below the moving averages, so I moved my stop up from down here to wherever it was, probably somewhere in there. And yeah, I got knocked out. Yeah, too bad, so sad. Okay. 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 Yeah, well, I didn't get shot. Okay? Yeah, that's a good day. I survive, right? What do I say in my book? Live to trade another day. Yes. So anywho, okay, stop thinking about profits all the time. What do you need to do as a trader to continue to trade for the next 20 years? That's how I want you to think about it. Okay? Okay? Cool. Jim Flex says, hey, man, I'm new. What advice can you give? All right. Do you have $88? Again, this is going to sound like a sales pitch. It's not. Okay. You go to investorbootcamp.com. Okay. It's not a lot of money. And I am not joking. This used to be well over 1,000. I'm still only charging 88. I lowered everything because of COVID-19. So if you were here, Jim Flex, I don't know, 10 years ago, it would be at least 10 times more expensive, a minimum of $888. But I think at one point it was $1,682, I think, at one point. Anyways, I lowered all the prices during COVID because I knew people were going to stay home, and instead of Netflix and chill, what a dumb thing. You can learn how to trade properly and watch it over and over and over again. So anyways, that's what I did. So for $88, you come into your membership area and you'll have access to this page. Then you log in, okay? And you have all these training courses. Okay? And for example, you'll learn, let's do macroeconomics. Okay. So I was at the St. Louis Fed a month ago. And you see this production possibilities curve? They actually talked about it. They called it something else. So I popped up my hand and I'm like, are you talking about the production possibilities curve? The frontier curve? Yes. Yes. Okay. And by the way, this reminds me. So that was 2 days of meetings. I did 1 day before that. So I've done, and then there was another day after that. So I've now done 4 days of meetings with the St. Louis Fed. And tomorrow I have my 5th, and to me, the most exciting day of training with the St. Louis Fed. And I was shocked, actually, how, I don't know, I guess I've been doing this a while, but I was shocked at, well, how well I know this stuff. Because I was in a room of knowledgeable people, and I was always ahead, which is, because I go in, I mean, maybe that sounds arrogant, but let me reverse it. Going into a Fed meeting, literally walking into the room at the St. Louis Fed filled with economists, I I was worried, like imposter syndrome, right? I was worried that I was the weakest link in the room. I don't know why I always think this. But it is how I think, I suppose. It's happened to me a few times in my life where I walk in and I'm like, I'm going to be the sucker. Like there's a saying when you play poker, you walk to the table and your job, the first thing you should do is look at all the other players and find out who the sucker is. And if you can't find them, then you're the sucker. So I always feel like I'm the sucker. So anyways, so I walk into this, room. And by the way, there was like a dozen people. I expected hundreds. I walked in, I'm like, oh my God. But anyways, the stuff that I teach you in this course is really hardcore awesome. And like I said, production possibility frontier curve comes into it. Like it's just assumed you know this stuff. And I take you through the history. We actually did this too, the circular flow model. We actually talked about this and the changes to the circular flow model that are likely to happen, right? So like all of this is included. This one course is something like 16 hours. And there's over a dozen courses that are like, some of them, some are longer, some are shorter, but my gosh. And then, so tomorrow, I'm going to spend the whole day, and this one's virtual. I don't have to go to St. Louis. I'm spending the whole entire day. Well, I think from 10 to 4 or whatever. So, it's government work, right? That's a whole day for government. Talking about new methodology at the Fed. I'm doing this because A, I want to know, but B, I want to be able to teach you what's new and what's different at the Fed. Not in policy, but the mechanics, like the wizard behind the curtain, they've changed what strings get pulled. And I'm going to learn and I'm going to teach you. And I've already spent many thousands of dollars to get this information. Well, it's part of the course. How to shift the... Yeah, see, this is great stuff. Ovens. How would your curve shift? Think about it for a second. Yeah, how would the curve shift if it's a change in technology? Now, Argentina also made decisions, and they made different decisions. Cool. This is good. The person could trade with somebody else. Yeah, nice. Oh, it's so good. Because we talk about these things, but you have to know it. Like imagine, again, sitting in a room full of economists. We're having a conversation, and meanwhile, because everybody there knows or should know, when something comes up like that, you literally see the chart in your mind. No, Jim Flex. You don't check it out. It's like, that is so stupid cheap. There's 100 hours or close to it of lectures. I mean, check it out. It's a decision. You either sign up like right now and change everything because you're serious about trading and investing, or you've just decided like, no, well, you're not serious. It's like, forget it, just quit. It ain't going to happen for you. Like, in all honesty. You're like, oh, well, it sounds really good, but whatever, just quit. Jim Flex. So it's like you either decide to work out 5 or 6 times a week and change your diet and stop eating pizzas 3 times a week and stop eating McDonald's 3 times a week, right? Or it just ain't going to happen. Right? By your name, I assume I'm making a valid point here. I want to be healthy. But I like pizza 3 times a week, and working out sucks. So sometimes I'll work out twice a week. Some weeks I won't work out at all. Forget it. Just forget it. Quit. Don't even try. What's the point? Okay? Yeah, UK slang. Well, it's one of those things. I need to know you have conviction, right? Yeah. So I recently lost 50 pounds, and somebody asked my wife, how did your husband lose 50 pounds? Because I'd like to lose some weight. And my wife's like, my husband is insanely disciplined. So he just stopped eating carbs. He stopped eating sugar. He eats sardines for breakfast. He's nuts. So if you're going to lose 50 pounds, you have to be insane because it's so much hard work. She didn't say it like word for word like that, but she definitely said, well, he just stopped eating all carbs and all sugar. That's it. Like cold turkey, that's it. It's over. No carbs, no sugar, no nothing. Yeah, I haven't worked out or anything. I haven't gone for a walk. I haven't ridden a bicycle. I haven't jogged for 5 minutes, but I lost 50 pounds. Yeah. Anyways, what I'm getting to, guys, is look, if you want to be, if you want to be healthy, you eat well and you exercise. What's the problem? If you want to be, let's say, rich, if one is healthy and the other one is rich, what do you have to do? What does LeBron James have to do to compete in a playoff game? Everything he possibly can. Coaches, tools, resources, diet, exercise, jabbing IVs into you, jumping into ice baths, staying up till 2 o'clock in the morning. Even though you're exhausted and everybody else is asleep, you're still preparing for the next game. That's how you become a champion. And of course, it's not just him. There are, when you look at all those who succeed in their sports, right? You have those that are, amazing players because of a God-given talent. There's no doubt about it. And then there's those that have the God-given talent and a sickening, ridiculous work ethic. And I am in the camp of the ridiculous, sickening work ethic. If you want to have and achieve that success that you are dreaming of, you have to turn the dream off. Dreaming's not going to get you there. How about more? That might get you there. Right? Oh, well, if I just have a positive attitude. No. What does that have to do with anything? You could be a jerk, but if you get out of bed and work your ass off all day, you might be a jerk, but you'll probably be successful. Has anyone ever run into a rich jerk? Yeah, probably. Okay? But you'll also meet a lot of rich, nice people. Most people are nice. Most jerks fail. The difference is ridiculous, sickening work ethic. And you can say, well, some people get lucky. All right, try getting lucky every single day for 20 years. It ain't going to happen. So if you're going to be a trader, you have to be a machine, not intellectually and emotionally, but in your ability to have the ridiculous, sickening work ethic. And you might have a chance. Okay? But the way I look at it, though, is like, I've always wanted as much information and as many tools as possible. And I look at this as a business. It's an investment. So like I've said in the early days, I'd pay $150 a month to get my Commitment to Traders report sent to me instead of spreadsheet in a visual form. Not nearly as nice as QuantBox, but in a visual form. $150 a month just to get the COT, but I needed to know, and it was worth it. It was an investment. I wanted more and better information. And now it's included for inside QuantBox, one of a million data points for $79. I was like, dude, it's so stupid cheap. So that's where, like, you know, when people are like, oh, I don't know, you're like, I don't get you. Like, you're not competing. You have to, I want you to want to compete. Right? Okay? A Harvard degree in economics is me competing. It does two things. I learned a few things about economics, but I knew a lot about economics anyways. But now, if I'm talking to a sophisticated investor about putting money into my trading fund, they're like, well, what's your educational background? I have an economics degree from Harvard. Do you understand? Like, it ends the conversation there. Two things. I'm knowledgeable and I'm vetted. Nobody ever says, wait, what, you went to Harvard? Yeah, I did. I went into an elite program that has now been deemed too difficult. Over 99% of applicants were turned away. They accepted me and 20 others. Only 10 of them actually graduated, and they shut the program down because it's too hard. But I graduated with an A. Right? Cum laude. Not just top of my cohort, top of the class. Not the top, but the top, near the top. That's what it means. An A student, but there were a couple of other guys that were whoa. But anyways, we don't even have to go through all of that. Okay? Well, thank you. But the conversation doesn't go there. It's just like, oh, you have an economics degree from Harvard? Yeah, done. Check, box checked. Cost me $100,000 to check a box on somebody else's list. Is it worth it? I'll do whatever it takes to succeed. In fact, you know what? Let's also get a master's degree in financial management. Yeah, let's just do that. Why? Ridiculous, sickening work ethic. But you see, my point here is if you're going to compete in this global market of trillions of dollars, you have to compete. Anything and everything. Okay? If it can be done, it will be done. You're like, great, I need to master technical analysis. I need to master fundamental analysis. I need to master trader psychology. I need to master. I need to master oil. I need to master gold. I need to master Bitcoin. So like I didn't know anything about cryptocurrencies. So I went to MIT and studied under Gary Gensler, who now runs the Securities and Exchange Commission and regulates cryptocurrencies. Oh my God. Okay. Whatever it takes to succeed and compete, I'm willing to do. So I pass the torch to you. I hope you find it motivational. You could say, well, what an arrogant prick, and leave. Well, I'm not trying to be arrogant. What I'm trying to say is I want you to be at that level of peak performance all the time. Not just the playoffs. Because if you're not like that during the 157 games in the regular season, you're not going to make the playoffs. So every day you show up with your God-given talent, and you are the most professional athlete on the floor or the ice or on the field. Okay? That's what I want for you. Maybe that's not you. Right? So anyways, right? Crest Military, yeah, this channel has been the daily routine for a year. Yeah. Well, I've been on YouTube since before it was even a company. Yeah. It wasn't even owned by Google. Yeah. Yeah, I remember I took my wife, my mother, and my two very young children on a vacation in South Lake Tahoe. And we were staying at and we had this beautiful suite, 3 bedrooms or something like that, right on the ski slopes. And I remember I grabbed a magazine. I brought it along. A Newsweek or something. And they had an article on YouTube. And I showed my wife. I'm like, hey, this is that YouTube thing I've been uploading videos to. And she's like, oh, yeah. And she's like, oh, you spell it like you, like Y-O-U. I'm like, yeah, because everybody back then thought it was the letter U, tube. Right? Because that was the trend going on. So Y-O-U tube didn't make any sense. That's not what people were doing. So anyways, and I'm like, oh yeah. I'm like, yeah, I've uploaded like almost 100 videos to this thing. And she's like, oh, that's cool. So that's how long I've been doing YouTube. But I have been doing these streams longer than that. YouTube just hadn't been invented yet. So anyways, yeah, that's why I invite you guys to join the Investor Bootcamp in the communities. All that's going to be pulled into TRADARS. So you're all going to be part of the TRADARS community. Okay? But I want you to have a certain attitude. If you're going to be a part of the TRADARS community, I want you to have this effort as part of our culture. Okay? Okay, instead of just throwing down trades, I want you to get better and better and better at your setting up of trades. I want you to become a strategic genius and tactically efficient and effective. But just throwing down a bunch of trades and is nowheresville. It's loserville, right? Yeah. Yeah. All right. So anyway, look, it's disappointing to see my trade take off. But do you recall me setting this up for you? For example, it fell this way. And as it was falling, everyone that's part of QuantBox, and I forgot to give you the video link. Okay, on QuantBox, on the QB, it had us buying. So this was falling like a ton of bricks. It had a massive down day. And at QuantBox and in the day trading group, I was very matter of fact. It's falling like a ton of bricks, and I'm going to buy it. So I got a little unlucky. Okay, a little unlucky on the execution, but I did see the perceived increase in risk from, this being a possibility. Now, fundamentally, that didn't make sense, according to QuantBox, but we all know it's possible. So I'm like, I removed the risk. I removed the threat. And you should never be disappointed by that. It's more like Just some bad luck, right? So anyway, so now we're up here. Well, over the period, and remember this is my coaching account, right? I'm not sitting here trading this account in the middle of the night, but there's an opportunity there, there's an opportunity there, there's an opportunity there, there's an opportunity there. Plenty of opportunities to get back in. Or the breach, right? Remember I've taught you the trap and break strategy? Okay? Trap and break strategy would indicate up, down, and gone. So plenty of opportunities to get back in. That's just the change in technical analysis. QuantBox has just been steady. Like, dude, this is a solid 10 to the upside, bro. This is a plus 10. A plus 10 on the QB. Okay? And you didn't buy it, it means you don't know what's happening. You see? And that's where I would get upset. Right? That's where I'd say, why don't I know this stuff? You should know. And that's where you're like, okay, what's it cost me? $79. Done. Problem solved. Now you have tools. Okay? Now you have tools to help you make better decisions. So what is that? Do you guys make $79 in one trade? How many trades is $79? If this is setting up all your trading fundamentally over the course of an entire month, it's $79. Looking at 8 markets on 3 different time frames, right? Looking at all asset classes, looking at seasonality and economic data and technical analysis and institutional and retail positioning, like just to say, dude, buy freaking gold. Right? I mean, it's ridiculous. So anyways, so yeah, we knew to buy that. That's obvious. Okay. Oh yeah, and I forgot. Hang on. YouTube.com/ I actually uploaded the video. So somebody asked about Aussie Kiwi or something. Right here. It's going to start in 13 minutes. So I'll end our live stream so you can watch this. Make sure you subscribe so that you're alerted, because I don't upload these on a regular basis because you're not paying money for it. So I don't feel obligated. But yeah, see, I thought it was a couple of weeks. See, it's been 4 weeks. That's how. So yeah, but I do upload them. Google it, noon Eastern time. Yeah. And then I would suspect under the new news, under the new, because what happened this weekend, which is not influenced here, Euro could get a big hit to its position. I mean, yet, or hasn't been yet. And you can look to sell Dow, depending on how they set up. Anyway, so the new one is right here. Let me give you the link. It launches in 11 minutes, huh? And you can watch it. It's good. And somebody asked about Aussie versus Kiwi. I directly cover that. But I wanted to point out, now that you're here, we expanded these gauges. So you see risk on, risk off, mixed. Okay. Check this out. We added the options market. We added the 2-year treasury market. Plus, we have the 10-year Treasury market, so short-term Treasuries versus long-term Treasuries, the gold market, the S&P 500, the US dollar, the Japanese yen, and VIX. And we do it on 3 time frames: daily, weekly, and monthly, showing you the relative changes in these asset classes. Now, they're individual markets. Okay? Different people looking at all the information they believe to be important and making a decision of whether they want to take on risk or like get away from risk. Whether they're bullish or bearish, let's say. Okay? Because they know what to do in those situations. But they're not talking to each other either. The options traders are not talking to the 10-year T-note traders, who are not talking to the gold traders, who are not talking to the S&P 500. All this leads to VIX. What was VIX? Hedging options on the S&P 500. They're not talking to each other. These are all different pits, in fact. I've seen the options pit on the S&P 500 where VIX is derived. I've been to the 10-year T-note pit. Okay? They're 2 pits over. So we're looking at all this information and we see the entire market like no one else does. Okay. Incredible, right? So that's been upgraded. There's lots of upgrades going on right now. Cool. So there's the link. Please click on the link. Okay, and subscribe. Click the thumbs up button. I'm giving it to you for free. We did this live this morning 3 hours ago. So I invite you